the way it should be. So yeah, so let's get started. I'll just let you introduce yourselves because you can do it much better than I can. You have the floor.
Okay, thank you. Thank you. This is Selim Raihan. I'm a professor of economics at the Dhaka University in Bangladesh.
Who's also my boss on my board. So my board of directors. So he's my boss also.
Thank you, Jay. And I'm also executive director of a think tank called SANEM, which is the co-organizer of this particular session. So I'm really grateful to JL and his team and GDN, I think, for giving us this opportunity. I'm also grateful to the co-panelists because they accepted our invitation. Thank you, Ashley.
Yeah, hello everyone. My name is Ashley. Currently I'm a fellow at the APEC PSU, Asia Pacific Economic Corporation at the Policy Support Unit. It's a research arm of the APEC organization. And yeah, I'm happy to be here and thank you so much for inviting me.
Hi everyone, I'm Ganga and I'm from Selim, and I work for an economic research institute based in Toronto called Institute of Policy Studies. I work there as a research fellow and also in charge of the policy and social policy.
Hi, I'm Philip Nader. I work at the Institute of Political Studies in Brighton, UK. Thank you.
Perfect. With more ado, so what we have about a quarter of an hour each, something like that, over 15 minutes each.
10 minutes.
10 minutes, okay.
And then we'll take questions.
Yeah.
Sure. Thank you, Jill. So
Billy,
in order, I'll go first.
Go for it.
Yep. I think I have to share presentation on the Zoom, no? Is it? Okay, let me share it. Yep, share. Just share the screen. Thank you. So you can see that this session is on digital transformation and financial inclusion, and I'll be talking on Bangladesh. So I'll be sharing the experience on Bangladesh. So why this topic matters? So we know that there's a convergence of digital technology and financial services, which is actually reshaping economies globally, and especially in the developing South. And in a country like Bangladesh, which is now in a kind of transformative stage, and it also gives us a lot of opportunity for structural transformation. And whether the question is whether this digital transformation is actually paving the way for right kind of financial inclusion, which can help structural transformation or structural change. But it is also true, and I'll show that a large part of the population remain excluded from formal financial systems, and exclusion perpetuates poverty, limits opportunity, and slows structural transformation. So in short, the main message is digital transformation can support financial inclusion, but this is not automatic. Institutional structure and regulatory barriers matter, and we need to look at those institutional structure and regulatory barriers. Very quickly, if I take you through the digital trend of digitalization in Bangladesh, so we can see that in terms of mobile cellular subscription and internet usage, it has actually increased quite a lot over the last 2 decades or so. There's been significant growth in internet and mobile phone users. Internet users rose from 0.07% in 2000 to 44.5%. And we also see the mobile phone subscription, it is now more than 100%. So it indicates rapid digital adoption and expanding digital connectivity. But when you compare Bangladesh with other countries or the averages of the other countries, for example, Bangladesh in comparison to low-income countries or lower-income countries, so Bangladesh performs better than low-income countries. The trend you can see, the red line is actually Bangladesh, and the lowest line is actually low-income countries. But Bangladesh still, Bangladesh belongs to lower middle income country group. And we can see the Bangladesh's trend, the path is actually below the average of the lower income country group. So we did, our chair, JL, he mentioned, no, he actually didn't mention, but I'm mentioning it because we are part of a study, of a 3-country study on digital public infrastructure. And we tried to see that what is the impact of digital public infrastructure, though we did not very exclusively try to explore the impact on the financial inclusion. But again, I thought that this is something worth referring to. So the recent study of DPI in Bangladesh, and we employed a mixed method approach with rigorous quantitative techniques, including propensity score matching to draw the causal inference at the individual level. And we actually use the ICT survey, use data and access of individuals and households by 2023. And then the key findings, if I just tell you, that individuals with access to digital public infrastructure are generally more socioeconomically advantageous than those without access. So that, and I'll show you in the next slide that actually this access matter and the difference in access. In Bangladesh, there is a clear digital divide in terms of the access. Also, we used nightlight data, and then we found that the households using DPI also show higher level of development as indicated by nightlight intensity. And the impact of DPI, it enables faster, easier, and more secure access to public services. So this is the data from the very latest World Bank, the Global Findex database 2025. And I just wanted to, because I know there are many numbers here, but the main message is that when you see for all, there is a bank or similar financial institution percentage of people who are 15 plus, people, you see that still the penetration of banking or the inclusion, if we, in a very broad terms, only 33%. But there is a mobile money banking money account, which is now 21%. And actually, we have seen that over the last 10 years, it has increased. I'll come back to that point. But you can easily see that between men and women, between richest 60%, poorest 40%, and more importantly, between rural and in urban, in the case of mobile money banking, and people out of labor force and in labor force, and with education, secondary education, and without secondary education, there are clear digital divides. In terms of banking account, in terms of use of the mobile money account, in terms of savings in the banking financial system, and whether owning any mobile, any digital, or making a digital payment, or owning a mobile telephone. So these are the key products in Bangladesh when it comes to digital transformation in financial services. This mobile financial services, money banking. So bKash is a very popular now, which actually there are 60 million users. And for information, Bangladesh is a country of more than 170 million people. So, and then there are a few others, but one of the most popular is bKash, which is actually initiated by a private bank, Bragg Bank. Probably you have heard that name, Bragg, which is very popular as an NGO, the largest NGO in the world. But they use their credibility and their good image, and then actually this bKash is performing very well. There are initiatives of agent banking or branchless banking. Digital payments of social transfers. Government is trying to now introduce or use these mobile financial services to make the social payments or transfer payment, stipends to the students, or different kinds of social old age allowances and various other social transfers. And of course, the digital infrastructure and regulatory support, for example, improving the broadband, mobile internet, digital ID frameworks, cybersecurity, and though it's still evolving. I'm very quickly, so why and how do digital transformation and financial inclusion link with structural transformation? So if we don't have much financial inclusion, both at the individual level and at the small and medium enterprise level, and at the digital transformation, if they can't really translate into those financial inclusion, and I have shown you earlier that there are disparities, that there are gaps, then if in order to use SMEs as a kind of a driver of structural transformation, we miss the opportunity. And even at the household level, we see gender divide, and with the location level, we see rural and urban divide. So there are important challenges and barriers, especially for barriers to digital inclusion, limited connectivity, digital device access. Many women are excluded still for several gender norms, cultural norms, to use mobile phone to open an account in the bcash or various other MFS. We have the problem of digital literacy and financial capability. And then there are also systematic and structural constraints or regulatory gaps, platform fragmentation, and weak infrastructure, so and so. So this is my last slide. So what I say that, I think this is the second last slide. So what I said that there are important policy and institutional initiatives in Bangladesh which have already been taken, both by the government and the private sector. I've already mentioned few of them, like in the private sector, the mobile financial system, and in the government, they are trying to develop the digital public infrastructure as well as using this MFS to transfer the social system, social protection transfer. But again, I think there are still significant gaps are remaining. So there's a need for meaningful, inclusive uses, move beyond account access to effective use of savings. So the numbers I have shown, it shows only the persons of people having account, but it doesn't show that to what extent they are effectively using those accounts. And if the service, financial service, can't offer them with the right kind of financial instruments, savings instruments, then they will not be able to be included. And also, another recommendation is enabling structural transformation through strong systems, especially aligning digital finance with industrial and climate goals and other broad development goals in the country. Just finals, when you talk about all this, especially the broad development agenda of the country, the ruling elite, and even the private sector, whether the market is functioning well, whether there is a kind of dominance of the big players, and then whether the small players, they remain outside of the whole this mechanism, this will actually dictate or influence the outcome of this whole digital transformation, whether this will be, the financial system will be more inclusive or not. I'll stop here. Thank you very much, Jill.
Can I just ask a question before opening it to the
Please,
floor?
please.
This is something that is, in some sense, it's kind of perturbing. So when we talk about inclusion, that means there is exclusion. And economists have been thinking about this sort of thing for an awful long time. And exclusion is a form of discrimination. Okay? So you are excluded from something, or you're excluded from something, whether it's financial or otherwise, because you belong to the wrong ethnic group, your skin is of the wrong color, you belong to the wrong political party, etc. Okay? There's all sorts of reasons. Now, when we talk about the fact that digital transformation has to be inclusive, this is a sort of the getting rid of the exclusionary stuff. It isn't something which is specific to digital. I get the impression that we're sort of talking as if there are not easy necessarily, but there's solutions which are specific to achieving digital inclusion, but to a large extent, they're the same solutions that we have failed to implement in just about every other sector of society to get inclusion. And economists look at discrimination from two perspectives. So one type of discrimination is what's known as taste discrimination. So somebody doesn't like someone else because of the color of their skin. Okay, they're stupid, but that's taste discrimination. Okay, it's taste. Then there's another form, a much more subtle form of discrimination, at least the way economists look at it, and exclusion, which is called statistical discrimination, which is simply, given that you have a certain skin color and or political party or ethnic group or whatever, and you know that you're going to be discriminated against, therefore you actually change your behavior, right? And you end up, so they're observationally the same. Okay? So because you belong to such and such an ethnic group, you're less educated, etc. And it isn't because someone is stopping you from doing it, it's because you self-limit yourself. And the policy prescriptions are completely different. And when we're talking about inclusion, I don't think we're being very realistic in terms of the policy prescriptions, right? I mean, if you have someone who's racist, and that leads to exclusion, there's one policy prescription. But if someone from a certain ethnic group or because of their gender does not do something, that's a different policy prescription. I just wanted to flag that because it's in some sense, it's as if we're talking about inclusivity as something which is digital inclusivity. No, this is a much broader fight. You have a question? Yeah, and then we'll go to the next. Let me open it up to the floor. Allez-y.
Merci beaucoup. Alors, je vais rebondir sur les commentaires de M. Arcand, en fait, pour dire que, en fait, le cas de Bangladesh est vraiment très intéressant. Pour le coup, parce que tout simplement, Bangladesh, on le sait, avec la microfinance, donc avec la Grameen Bank du professeur Mohamed Yunus, qui, il y a de cela 20 ans, a été, en tout cas pour le monde,
But you will translate, I know.
Okay.
Ok, donc je disais que le cas de Bangladesh est d'autant plus important pour moi que Bangladesh, en tout cas, à travers le programme.
Arrêtez une seconde. It's important in the sense because she's aware of all the Burmese banks.
Of course, from the microfinance, yeah.
Okay.
Alors, ça a permis, en tout cas, d'après les études à l'époque et jusqu'à présent, à travers le programme de microfinance, d'inclure de favoriser l'inclusion financière. Voilà.
So in Bangladesh, it's resulted, at least from what she's read, in a modicum of financial inclusion. Put it that way.
Alors, donc tantôt, M. Arcand disait justement à propos de l'inclusion que l'inclusion, c'est le contraire un peu de l'exclusion. Donc, en ciblant les femmes comme groupe, on va dire, favorisé dans l'octroi des microcrédits, c'était une forme d'inclusion financière qui avait quand même à l'époque fait ses preuves par l'augmentation de l'activité.
So if you're giving sort of positive discrimination to women in terms of financial inclusion, well, that's some things that seems to have worked.
Alors moi, ce que j'aimerais savoir maintenant, dans le contexte où nous trouvons de la digitalisation, est-ce que les problématiques anciennes, les problématiques nouvelles, en tout cas les nouvelles formes d'exclusion ont juste repris, on va dire, la reconfiguration, ou est-ce qu'il y a de nouvelles dynamiques?
Yeah, so are we, in some sense, back to square one now that we're going digital, so that we have to go through this whole rigmarole again in terms of, doing positive discrimination because has it reset the counter to zero?
C'est ça, c'est ça.
Shall I quickly just
Quickly, and then we'll
yeah,
get
of
to the next one.
I think excellent point. Yes, what I was thinking when JL he was elaborating some important points. So I thought we already have high exclusionary policies or structure in the non-digital world, but now we want to have an inclusive digital world. So how do you really link these two? Just one example is that I fully agree with you. The story you have talked about microfinance in Bangladesh, it actually helped. But again, there are concerns now in Bangladesh that whether it is really helping poor people graduating significantly towards the next level, or it is kind of perpetuating a kind of moderate level of poverty. You are not really graduating to a very high. So there's still big concerns. That's why the microfinance model is being now transformed into microfinance plus. So some other things you need to be added. One more thing is that when it comes to digital, for example, the platform economy, workers' rights, or even wage, or even your different kinds of privileges. In the platform economy, the workers, or even the cab drivers, the Uber drivers, they often complain that they don't have the command or they have the authority over the algorithm, which is being maybe exclusionary and which is not really inclusive. And we don't have any transparency over those algorithms. So that's why we have heard in India, Bangladesh, and South Asia, a lot of complaints, and I'm quite sure in other countries too, that these platform economy workers, they are highly excluded. They are not being included in the system. Thank you. This is Ashley now. Oh, you were Ganga with the next presentation? Yes. Okay, please. So let me share this. Share your screen. You just use this arrow.
All right. Okay.
So good afternoon to all of you. So I'm going to talk about digital transformation and financial inclusion in Sri Lanka. So before moving into various initiatives taken to transform the financial sector in Sri Lanka, so let me just quickly sort of highlight a few issues and some statistics. So as you can see, I mean, I think somewhat different to what Selim presented in the Bangladesh case. So there is high level of access to accounts with minimum differences across socio-economic groups in Sri Lanka. So basically, if you can see that as per the latest Global Findex data, about 82% of the adults have access to accounts, and there's a very small differences across the gender groups and as well as the income group. So even among the poorest 40%, the access is about 8%, 80%. So this is actually relatively high compared to the average of the South Asia and as well as the average of
Please continue.
lower middle income countries. And interestingly, so the majority of these accounts are actually accounts with financial institutions, including banks and thrift and credit cooperative societies, as well as microfinance institutions. And in Sri Lanka, for some reason, the mobile banking penetration has been actually quite low. Only about 3% of the adults have used mobile banking. So, but the institutional access is actually quite high. So, I mean, despite this high level of access to finance, we all know that financial inclusion is beyond just access to finance. So there have been a lot of issues like high transaction cost and time taken to process loan savings account. There have been various measures by the government and central bank as well as the private sector to transform the financial sector. So, so one of the key measures taken was to strengthen the national payment infrastructure. This is basically to enable secure and efficient transactions at zero or minimum cost, and also to allow interoperability across various financial institutions as well as payment instruments like bank accounts and digital wallets, etc. So some of the very recent initiatives have been the introducing the Lanka QR to support the QR code payments as well as the online payment platforms where the government, the payments for government institutions can be paid through the central sort of gateway called GovPay. And in addition to this initiative, there have also been various innovations by financial institutions and banks like digital wallets and mobile apps, internet banking, and also digital loans, and lots of things that we've already kind of heard throughout the. There have also been initiatives by the mobile network operators like EasyCash and Mcash, and offering various services to particularly to lower income groups, as well as a lot of young people have been sort of using these EasyCash accounts. So with this initiative, there has also been a growing policy momentum towards digital transformation. The National Digital Economy 2030 strategy was launched recently, and then there's National Financial Inclusion Strategy and National Digital Literacy Roadmap, which were launched recently. And also the Central Bank of Sri Lanka launched the FinTech Regulatory Sandbox in 2020. And also the Central Bank has launched a digital payment promotion campaign in 2025, wherein all the districts events are organized to bring in financial institutions and the mobile network operators, as well as the SMEs, and to raise awareness of what is available and how to use QR payments and the digital wallets. And also it is an opportunity for them to register also with these accounts. So in addition, there have also been some initiatives on regulation. The Financial Consumer Protection Regulation and Personal Data Protection Regulations also have been introduced in recent times. So as you can see, so there's been an increase in the digital payments, so internet-based transactions and debit card and credit card transactions have increased, and also QR-based
payments have increased. So even if it was introduced in 2020, so by 2024, over 140,000 merchants have already registered into QR payment with Lanka QR. Mobile money, only about 3% of the adults in Sri Lanka use mobile money accounts, and they too actually have bank accounts or accounts with financial institutions. So only about 0.5% of the adults have been using, depending solely on the mobile account. So this is partly because of the financial and all
one point we are saying, okay, let us improve the digital payments and all digital transactions. And we consider or we portray that as a success, economic success. But there are social barriers, even economic barriers to that. And we are trapped into that. How are we going to address this? And in some like the crime-prone countries, there are many other crimes other than this digital frauds. So the least priority that is being given in the solution, like the police, is this. And many people experience. If there are some physical violence, other violence, sexual violence, they will address to some extent. Digital means they will ask you to run to the banks, to here, there. Actually, there is no cohesive system of addressing your issues. And that is actually coming in a major way in many developing countries. Yeah. I would be happy to listen to your idea.
So you were asking about the predatory loans.
Yes.
Yeah. So I mean, well, multiple lending was also an issue actually in Sri Lanka at some point. Multiple lending and multiple borrowing, especially in the microfinance sector. This predatory, loans payments, it is also has been actually an issue of concern. Now, I think when it comes to this digital transformation, so one other concern is actually because there have been a surge of digital lenders now, which are actually unregulated, which are not actually under the regulation of the central bank. So, which in a way kind of taking us to another level of, I mean, the poor people in particular, so to another level of vulnerability, like what was faced actually in Sri Lanka about 10-15 years ago with the surge of microfinance institutions or the more commercial-based microfinance institutions sort of overlending to people. So there definitely has to be some sort of a regulation, which is difficult because at the moment, actually, it's not under the central bank regulations. And there has already been cases of some sort of I would say like harassment, because, through the mobile phone, you have the access to the contact details. So, there have been cases where, when you don't pay the loans, some harassment type of methods have been used, or the contact, through your contact list and all that. So, yeah, so about the cybersecurity, I mean, I know in the case of Sri Lanka, some sort of regulations are coming up, but it's very early stage. So it's difficult for me to say much about it. So maybe Selim, you want to? Yeah.
Bangladesh case? Sure. Yeah. First question is extremely important. In Bangladesh is the biggest sufferer of it. High default loans, private sector or cronies, they grab the large chunk of the loans from the financial sector. And even in the non-digital sector, you see they're poor and the marginalized, they're excluded. And so this is a big problem now, and probably you know about the political transition in Bangladesh, which took place last year. And one of the biggest reasons is that these very collapse of institutions and financial institutions. And so this is extremely important in Bangladesh. Cybersecurity, fully agree. Bangladesh certainly saw that out of its foreign reserve account, almost $800 million was siphoned away, and digitally, it was done digitally. And someone sitting in North Korea actually did that. So still the country is struggling to get that money back. But I fully agree with you. The problem is the technology, the way it moves fast. There is a very fast movement, but the regulation we are seriously lagging at the capacity of the government in understanding the whole issue. So I think it's extremely important to know when it comes to regulation. Yes.
Just one thing. There's one question. There's one question online, which is, what is the barrier to access of mobile banking services in Sri Lanka? I mean, we saw the main one was they see no need for it, but I think the question is explicitly, what is the barrier?
Mobile money account. This is 3%.
Yeah. So as I mentioned earlier, so there is no sort of a barrier. I think it's the sort of willingness from the people's end, because 80% of over 80% of the people have access to mobile phones. So maybe it's a barrier for those who don't have, but then for others, it's an option. When I think it's what is actually coming out from that survey is actually people think that there is no need for it. But probably it's a behavioral change too, behavioral issue too, because when there are credit unions or different credit cooperative societies and bank branches close by, and then they have been dealing with these societies or banks for a long time. So, and probably people just have that preference to kind of walk into a nearby bank branch and get things done rather than sort of, getting into a mobile wallet. So, and what we found was even those who have used mobile accounts, so it has largely been for paying utility bills. And primarily it's to pay utility bills actually with the same subscriber, because these are mobile network operators have broadband and the TV, cable TV, and the different products. So it's basically to pay some of those utility bills. But then at the same time, there are some portion that has been used to transfer for peer-to-peer transfers, etc. So I would say, Barry, I think raising awareness is also needed.
Can I get 30 seconds to contrast Bangladesh experience with the...
Okay, then we have one question. And then
Okay.
we'll move to...
No, I think this is very interesting in the sense, because I was looking at Sri Lankan data while comparing for Bangladesh. Bangladesh, it's a bank account holder receives 33% of the items. Sri Lanka more than 80%. And Sri Lanka more than 80% is for the last 1.5 decades. Bangladesh, it moved from around 10% to 33% around the last 1 decade. So what in my understanding is that probably the lack of appetite in Sri Lanka is because to begin with, the country was institutionally, even in the non-digital world, so even in a broad sense, inclusive in the sense, giving more access to the, having a broad access of accounts by the broad section of the people. In Bangladesh, that is not in the case. That's why when people found, and also literacy in Sri Lanka played a very important role. It achieved almost 100% literacy rate on 30 years back. So what is it that in Bangladesh, when people wanted to get into the financial system, they found barriers in the formal financial account, and the easy way was to get into the mobile or financial system. But in Sri Lanka, probably I don't know. It's my reading that probably that appetite was not much there. Thank you.
Thank you. This is Nidhi, and I'm a researcher from India. So just for my very broad understanding, so is it that people are not into mobile banking and mobile accounts, but they still want to? So in my understanding, it is sort of counterintuitive that people want to put their money in the bank, but they don't want to transact through the mobile. So what is it? Is it a cashless economy working through the banks, or what is the reliance on cash? Is it heavy reliance on cash because there are no mobile accounts, or how is it?
Yeah, so for the moment, yes, it's actually heavily relying on cash, but then there have been efforts to sort of, get even the people in the semi-formal financial institutions into the formal sector now. For example, now a lot of things are happening with regard to digitization in the formal sector now, what I showed earlier. So in the formal financial institution, but not in the thrift and credit cooperative societies and microfinance institutions. So digitization, to go to that level is difficult. But now one example is actually now the social protection programs. So one of the largest social protection programs in Sri Lanka called Samurdhi, which started way back in mid-1990s. So under that, a separate banking society system was actually set up throughout the country to basically inculcate the savings and financial services among the people, and at the same time giving the social transfers through that system. So this has been there, but this is under a separate act of parliament, not under central bank supervision. So now with the digitization process and also in recent other initiatives, so there have been a new program has been introduced. This is a sort of with the change of the political, regime, called Aswasuma. So under that program, actually there has been a push to sort of get everyone to open bank accounts in the formal financial sector. So in the past year, there has been a move towards that. And even the banking agents, would visit the divisions and villages and with the government officials at the divisional level, get people who don't actually have bank accounts in the formal financial institution, but only in the semi-formal financial institution, open accounts to get the transfers. Yeah, but it's given it's a small country and the density is actually the banking density is relatively already have some sort of access to the dealing with financial institutions. So, it's just a one little, extra move. But then digital, so when it's actually linked to the formal financial institution, so you get the mobile apps, all that. So the move is to sort of get them for that. And then this QR code system also, because there's been this, the campaigns by the central bank, through this year to sort of get the small vendors, merchants all registered into the QR system. It's just moving towards the cashless kind of.
Yeah.
That's
Yes. Oh.
it's legal stuff. It's almost dangerous, the overall situation.
Yeah.
Which one?
Ashley, the top one. Yeah.
Yeah, so I'm also not from the financial inclusion side, but I'm very glad that I had the session to talk about energy sector because there wouldn't be AI or digital technologies without energy, and also vice versa. There wouldn't be renewable energy integration without AI increasingly. So there's several key challenges systems that we are currently observing across the APEC economies, which is for that we are hosting 56% of energy demand globally and 68% of electricity demand globally. And at the same time, renewable integration is accelerating because we are committed to double our renewable energy share by 2030. And at the same time, grids are becoming more complex and decentralized. And we are also seeing increasing large-scale blackouts across the economies due to extreme weather, which is getting more frequent, and aging infrastructure that caused, for example, one power grid failure that cascaded into widespread disruptions. I think that's what happened in the Iberian Peninsula as well. So all of this puts growing pressure on energy reliability, resilience, and planning capacity. And this is where, in our recent brief, AI has emerged as the tool to help us meet this challenge. At the generation level, this part, AI enhances forecasting energy demand, especially with the volatility of renewable sources, helping balance in variability and improve the grid stability. And it also optimizes operations. So it optimizes power flows and dispatch so that it boosts efficiency and reduce emissions for the conventional power plants. And in the transmission lines, we see that it can enhance real-time system balancing and dynamic line rating. So if you've heard before, dynamic line rating is very important for long transmission lines from renewable energy sources, which is probably far from the urban or rural areas. And AI has been able to unlock certain percentage so that existing transmission line can load more share of energy. So in LMICs, this is very important because then you wouldn't be needing newer infrastructure or new transmission lines to increase your renewable energy uptake. And at the end use, it can integrate assets. So it can enhance our behavior as prosumers or product producers, consumers with battery storage, EVs, etc. Yeah. So one of the biggest challenge in APEC's energy transition is, I mentioned before, today's traditional power grid. So today's traditional power grid is built from a centralized, usually fossil fuel plant that's only working in a one-way direction with limited real-time monitoring and responsiveness. And as demand grows, we are integrating more and more variable of renewable energy. That means energy is flowing from different multiple energy sources to different directions. And extreme weather events also and imbalances and local failures cascade into widespread disruptions. So this is where AI optimized the grid with, like I mentioned before, they can balance the demand and supply and also ensuring electricity is distributed efficiently and reliably. This is why we are also argue that it can help improve grid resilience because there's many amazing things in terms of grid resilience. It can issue early warnings. Some electricity providers in the US, for example, they have already implemented early power shutoffs. So in terms of hurricane, they can shut off the assets and then avoid widespread disruptions. And in terms of buildings and construction, as we know that it hosts 37% of global emissions. So I think what's interesting about buildings is a part of the way that it can help reduce emissions and also induce behavior system through the real-time control of heating and cooling. What's interesting is it can help mitigate urban heat islands, as we know that there's an increasing urban heat island intensity, and AI can analyze the impact of cooling interventions, such as green roofs or shade trees based on local climate conditions. Going back to data localizations, I think this is very important. Hence, it can also induce model urban cooling solutions naturally. And two last examples is first, energy in industry. So industry right now accounts for nearly 2/3 of global industrial energy demand. And essentially using these two highly emitting industries, it can reduce the energy demand by 2 to 6%. Across, for example, steelmaking, they have already been implementing it, and even in mineral exploration, because as we know, critical or transition minerals is increasingly being demanded, and AI can help identify these critical resources such as lithium and nickel to be able to extract it accurately and safely to reduce costs and also increase labor safetiness. And lastly, is in the energy markets. So with the logic of supply being volatile and being complex and decentralized, so is also the market. So AI can help efficiently forecast demand and price fluctuations and also system imbalances. It can help during the pre-market stage. So if you were aware, we have the pre-bidding process and then the bidding process and then the post-market process. It can also help increase demand side response. So this is a great tool, but also I think I would like to iterate my plenary yesterday that when you are implementing this technology to control your power grid, to control your market, then it gets to decide who gets to access the electricity and affordable energy. So what does this require us institutionally? First, institutionally, we are arguing that harmonized regulatory frameworks and standards is very important. Right now, we don't have a cohesive regulatory. Asia Pacific has 16 economies that is rolling out their own AI national development. And equally important is also ensuring AI is trustworthy. That means the system must be reliable, transparent, explainable, and accountable. So reliable means that the system can function in every real world conditions. Transparency and explainable mean that all energy stakeholders know how the decision is being made. And accountable means answering the question, who is responsible when AI makes the wrong call? This is important when you put the AI to the energy supply for hospitals, for example. And collaboration across economies is important for the equity of the deployment. And lastly is the technical enablers. So across energy companies, they are mentioning almost the same things. Two technical barriers. First is low data quality, and second is workforce shortages, especially in LMICs. This is much more accentuated. So in terms of data, I know there's been a discussion about data quantity a lot, but actually, what is very just as important is data quality. Because in the energy sector, you need data that is interoperable and standardized. So that means it's consistent. And data localization has also trade-offs where it can increase cost and limit cross-border AI collaboration. And for the workforce gaps, they have identified that there's a gap in machine learning, data engineering, and system integration. And also, we need to keep in mind that this AI will evolve, will change the system operators' roles. Hence why cross-disciplinary skill is also important. Sorry, this is my last slide. So policy implications, we identify 6 things. So first is develop regional governance standards. There's already an international standards, by the way, by ISO. So economies can probably adopt and adjust it to their own, create regulatory sandboxes for low-risk pilots, establish a regional data task force, adopt and align international standards, coordinate on capacity buildings, and invest in AI innovation, specifically in energy efficiency and resilience. And you can find the report here. Yeah, that's all from my side. Thank you.
Actually, thank you for the presentation. Actually, it's just a clarification, please, from a concerned citizen. When you say that AI can cut by about 18% constructions and building emissions, and with regards to industries that AI can also reduce the energy demand.
Yep.
Is that factored by 2050, I believe you say? Does that factor in the increase? Or is that a reduction from the volume of such use that we have right now? If you see what I'm trying to say here. In other words, will that decrease in reference to what we have right now? But eventually that gain will be lost because these activities just keep growing and growing.
Yeah.
Yeah.
Yeah. Thank you. Yeah, that's a real concern. So I understand that to build AI, we need data centers. And data centers already is energy intensive and water intensive. So you put AI, you put energy. So where does this calculation go? First of all, I believe that there is an increasing stringent regulations in the private sector that data centers needs to be renewable powered. And second of all, I think I would like to mention the newspaper by Nicholas Stern. So he calculates by 2035, the emissions that is reduced from 3 biggest sectors of emissions. So first is power grid. Second is light vehicles, I think. And third is daily, what is milk? Dairy product. It will gain 3 to 6% of emission reduction, while data centers emit much less than that. So he makes the calculation, and in the conclusion, data centers or AI will have a net positive due to that scenario. But I agree that I think as someone from Indonesia, I think we are also a bit worried that every economy will have the race to the bottom mentality in terms of I want these data centers to open in my country because it will bring employment. But then we forget that if it's just run by fossil fuel, then it will defeat the purpose. That's why there is some inspiration. For example, I think I mentioned the Philippines, that AI has already been included in their national development planning document, and they accentuate that AI and renewable energy needs to be codependent. So I don't want to say that AI can help developing economies to leapfrog, because I truly don't know. It depends on the policymakers, how stringent they can be. But I think it can help us to stay at parity with those that are less vulnerable. But I really suggest for you all to maybe read the paper of Nicholas Stern, because it's also cited in my policy brief, and it's a very interesting calculation.
Those ones, oh no, I don't want to do that, I think. That red one's down there. Yeah. Right, Mike. Okay, as the last, well, on the last panel of a 3-day conference, as the last speaker, most important thing for me is to not be boring. So, yes, that one, please. And full screen. Thank you. So, yeah, I'm going to take a big step back and ask, what if the problem we need to talk about is not exclusion? If we think about financial inclusion and digital transformation only in terms of people being excluded from formal finance and just waiting to be brought in, we heard a little about this in Sri Lanka already, we ignore the often harmful inclusion that has already happened. The hundreds of millions of women and men who already engage with the poverty finance industry, which includes traditional micro lenders as well as inclusive fintech, routinely pay annual interest rates of over 50%, often even 100%. But that's only part of the problem, because the biggest problem in some sense is power. High interest rates and fees are just an expression of a more fundamental power imbalance, where people who have very few choices are dealing with institutions that are owned by faraway investors, run by socio-economic elites, and governed by algorithms that people can't understand or hold to account. The financial contracts routinely lead deeper into poverty, sometimes losing family land, sometimes being forced to sell a kidney, sometimes committing suicide, and often, most often, actually just ending on a long-term treadmill of debt, which sustainably delivers payments, but also seems to sustain poverty. There appears to be an almost unshakable global consensus that even more finance needs to be channeled via digital rails, but this consensus, I want to argue, is built on an ignorance of a vast quantity, ignorance not necessarily in the sense of not knowing, but perhaps also ignoring, a vast quantity of evidence about how many people are already struggling with too much finance, and definitely the wrong type of finance. Next slide. How does this work?
I wish people wouldn't quote that paper.
Why?
It's a bad paper. I get a lot of cites on it, but it's a bad paper.
I guess the answer is never write a bad paper, but that's easy to say. So, yeah, thank you. Cambodia is a country of 3.6 million households where the micro-lending industry has issued small loans to 3.2 million borrowers. In 2022, the microcredit loan portfolio was $18 billion, which is equivalent to 61% of GDP. Peasant farmers routinely owe tens of thousands of dollars, which nobody expects they will ever repay, but most loans are secured by land titles, and research suggests that tens of thousands of households have lost their land, fallen deeper into poverty, and been forced to migrate. The twist to all this is that development funders co-financed and promoted this microfinancial land-grabbing machine. So is Cambodia an extreme case? Yeah, of course it's an extreme case. It certainly is. But overall, quantitative and qualitative evidence from around the world paints a worrying picture about many of the impacts of financial inclusion. Findings from randomized control trials have been largely disappointing. Anthropological and sociological evidence shows how women mostly bear the financial, social, and physical burdens of debt, and that women are preferred borrowers by many lenders because women are easier to discipline. And even the World Bank's recent internal evaluation, which is quoted here, highlights the risks of harm and explicitly says that financial inclusion is not a solution to poverty. So what the phrase mixed and inconclusive evidence means is that some people benefit while others lose. That's what mixed means. Inconclusive is that some studies find positive, others find negative impacts, and ultimately it's just not possible to say that financial inclusion has a provable net positive effect. So even without cases like Cambodia, the evidence should make us worried about pushing financial inclusion further with a lot of acceleration. Is it okay for a significant minority of already poor people to be harmed so that others can be helped? In the medical world, I'm no medic, but as far as I know, no such treatment would be administered, except maybe to those who are terminally ill. But if financial health, as we heard yesterday, is the goal, then it should not be tolerated that financial inclusion also creates ill health. Another point of evidence is, just briefly to mention, that over-indebtedness crises and mass protest events against exploitative loans have led to microfinance collapses in Bolivia, Bosnia, Morocco, Nicaragua, Pakistan, Sri Lanka, and various parts of India several times. When borrowers refuse to repay, and they take huge personal risks normally when they do this, they are essentially providing feedback. And they're saying that the ones who are financially illiterate or not financially literate enough are the lenders who are acting irresponsibly. Now, so that's a very negative picture. So I need to add two caveats to that negative picture. First, admittedly, I have talked so far as if financial inclusion were only about credit, which it is not. And there are important conversations about savings and digital payments to be had. Some of my own research with Adivasi tribal people in India who are seeking to escape debt bondage underscores the positive power of small savings programs. People saving as little as 2 or 5 rupees a week, or even just saving different types of grain, can build powerful collective assets, which enable them to overcome intergenerational debt bondage as a group. And they do so by using these savings to make themselves no longer dependent on lenders. After they escape, they declare that they never want to get in debt again, and they chase away the money lenders and the microfinance lenders when they come and saying, do you want to loan? The key insight about this is about the power of community savings rather than external financial relationships. Secondly, I want to say that there undeniably is a place and time for small loans to people who have entrepreneurial potential and real business opportunities. The benefit is also really obvious when you can send your sick mother some money as an emergency to go to the hospital. Expanding options is great. But we do also need to see clearly that there are usually not so many opportunities for more micro enterprises, and that free healthcare is better than the ability to borrow and end up in debt for health. Financial services, as the World Bank itself now says, are at best a treatment of certain symptoms of poverty, but not of its causes. So 2 things to wrap up. Firstly, I've not said much about digital innovations deliberately, because the point here is that insufficient digitalization is not the problem. Certainly, some digital innovations could make things better. Automated lending decisions and mobile payments should theoretically reduce the costs of financial inclusion massively. And so if we look at Kenya, which is arguably the most advanced African country for digital financial inclusion, we see who actually captures the gains in the system as it stands. The most popular digital lender, M-Shwari, has disbursed more than 100 million loans to over 20 million borrowers, and its monthly charges equate to 90% annualized interest. The next most popular lender, Tala, can even charge double that. So In the system as it stands, the benefits of digitalization are not being passed on to users. Second thing to wrap up, of course, there are alternatives, and we need to talk about them. But these alternatives require us to question the dominant more finance everywhere consensus, which has created the often harmful forms of inclusion that I've been talking about, and has also even been redirecting limited public resources towards leveraging, which means de facto subsidizing, private finance, instead of focusing on social objectives with those limited public resources. Shifting away from a market logic towards a people logic means to ask things like, should digital loans be the solution for paying school fees? Or do we need to think again about how to provide free schooling for children? Or if current systems are designed to meet the needs of financial investors above all, and give poor people no control over those systems, how can finance be effectively democratized? Instead of dismissing community financial arrangements as archaic, outdated, and inefficient, can we ask about what they actually do for communities? Why do they exist? Now, we know small is not always beautiful, but examples like Brazil's Mumbuka social currency show that even these community systems can be upscaled and digitalized. So at a larger scale, meanwhile, it's important for us to think and work together on digital public infrastructures that operate in a more democratic way as collectively owned and collectively governed resources. Thank you for the attention you've paid.
So, any questions, comments? I think this is I think we'll get some reaction. The paper he was referring to is a paper that I published a few years ago, which is called Too Much Finance ? And which gets an awful lot of cites. And I still agree with what I said in that paper. I just find that empirically it's embarrassing with respect to some of the econometrically it's embarrassing with respect to some of the other papers that I published. And that nobody cares about. I stand by my too much finance, getting rid of the question mark. My answer is yes, too much finance.
I'm curious to know, is there any efficiency analysis in this, in provisioning of financial instruments? Because I'm raising this question, the efficiency, because in many sectors we do efficiency, like analyze the efficiency of this, including education also, because we analyze school efficiency, college efficiency and all that. So do we find that that will give to some extent an answer to what is happening actually? What is the costs, benefits associated with that? And how much is benefit, how much is cost? Is benefit way better than the costs that are associated with that? So I'm not finding any study. I was looking at some point of time, but I'm not finding what's the efficiency of the efficiency analysis of.
But so you want like data development analysis, something like that?
Yeah.
Or you want a frontier estimation?
No, particularly including all social benefits that we get, not exactly the economic benefits. Let's say get into the larger sense of benefits and costs, and then have some efficiency analysis to see how these financial instruments are actually helping to. Yeah, that would be very.
Let's take a question.
Hi, Philip. It's actually very interesting. Myself being from India, it's very interesting to note your comprehensive fieldwork across the country, and the findings are actually very interesting for me. So just out of curiosity, so microfinance is one part of the various integrated rural development and social protection kind of a net that we've built over the years. The entire architecture, one part of that is microfinance. The other way in which rural and vulnerable groups have been sort of tackled with is through SHGs and through sort of accumulating their enterprising power in that form. And as far as I'm aware, as far as I've read, SHGs have sort of met with a lot of success, and that is one model that India has been praised across for. So in comparison to microfinance is basically SHGs plus adding a financial aspect to it. So where do you identify the problem being? So when we started accumulating the enterprising spirit, when women got together and they wanted to get entrepreneurial in nature, they were successful. But when money was added to that, you're saying the problem was lying there. So where exactly in this value chain do we see the problem? Number one. And number two, so the infrastructure of microfinance, it's pretty much there. It's intact. We can say it is unsuccessful and it has led to too much finance, like JL said. But what do we do with it at the moment? So do we let it be, or do we build a competing system? What are your thoughts on this?
Thank you. I'm going to try to quickly just say about the efficiency analysis questions. I am sure there are things out there. Where there is data, there is always an econometrician. But the question that I would just sort of ask back is, where there is no clearly demonstrable impact, what would one be calculating the efficiency of? So I don't think that I would see great validity in such work. But that's also beyond a little beyond my area of expertise, and I need to be honest about that. SHGs, which, just to unpack for those who don't speak South Asian lingo, it's self-help groups, and these are specifically women's self-help groups which have been linked in India over the last 35 years to formal banks, usually state banks, as a way of basically giving one account to a collective of women to make savings accounts accessible and affordable when they otherwise wouldn't be. And in that way, they're an access to the formal banking system, and relatively different to the commercial microfinance industry. One very big difference also being that commercial microfinance institutions in India do not take savings, because if they did, they would be regulated, and they don't like that. So my answer to your question of what to do about the industry is, firstly, I think if something, after a lot of subsidies and a lot of growth, is not, and we probably will need to debate this to some extent, is not delivering the reasons for which it was subsidized and made to grow, then don't destroy it, but also start taking away artificial support from it. Regulate microfinance lenders like you do other lenders. Hold them to the same standards of responsibility. Microfinance in India is still self-regulated by the industry entirely, except for in one state where in 2010 in Andhra Pradesh, the government passed an ordinance. And the government of Andhra Pradesh is still blamed for this because they annoyed the microfinance industry and led to the writing off of $1 billion of loans. So don't destroy it, don't dismantle it, but regulate it and hold it to high standards of accountability, and move those subsidies and the regulatory support to places where either there already is more evidence, such as social protection programs, such as savings. Sorry, this is the last thing I'll say. From having led a systematic review of the systematic reviews that exist on financial inclusion, the only thing that we know has a demonstratively consistent positive effect, even though it is relatively small, because you cannot save your way out of poverty alone, is savings services. Credit, highly heterogeneous, mixed, unclear. But savings, it's clear. It helps, it doesn't harm. So that is something that perhaps we can all agree on.
Just one point, and I'll give you the mic, is what sort of is standing out here is also the different realities that different people from different parts of the world have with respect to financial inclusion, whether digital or not, and to microfinance. So you have the hagiography of Muhammad Yunus, obviously, in Bangladesh, but sort of where I've done most of my work, and I've worked in 47 different African countries, in Africa south of the Sahara, microfinance institutions, there's only one way to, some of them run by some famous French politicians, former French politicians, and one in particular, which is quite disgusting, is they're loan sharks. That's the only way you can qualify it, is that they're loan sharks.
Yeah.
I'm referring to Planète Microfinance. Ce sont des requins. They are sharks. They are basically sharks. But then you also have the tradition in West Africa of tontine, so which in Latin America are rotating savings and credit associations. So there are these traditional forms of finance, but in some sense, the commercial side has not been able to scale up. I mean, this is sort of, I'm not being particularly rigorous here, but they haven't been, maybe they need the UNICEF smell tools, I don't know, but they haven't been able to scale up the stuff that works in a tontine or in a rotating savings and credit association. and which works extremely well. And probably it's because what you cannot scale up is trust. I don't think you can scale up trust. Anyway, but I just find it interesting in the room. We have different perspectives. Who do we have from Latin America in the room? Do we have anyone in the room from? Yeah, exactly. You're from Guyana. Okay, so we'd like a perspective. Give us a perspective from the only Anglophone country in Latin America. But anyway, I just wanted to point out it's highly heterogeneous, and sort of everyone's coming at it with a prioris, from the sublime to the ridiculous.
Alors, merci beaucoup pour.
Je vais essayer de comprendre
You're
le français.
Okay, fine.
Thank you. Donc,
If there's something you don't follow, just.
je vous remercie vraiment pour votre présentation. En fait, moi, c'était juste une contribution parce que moi, j'ai fait une thèse sur les microfinances, l'impact économique et social, comme on parlait tout tantôt. Et dans la littérature, en tout cas, ce qu'on voit, c'est qu'il y a beaucoup d'études, mais les résultats sont plutôt mitigés. En termes d'impact économique, on n'en voit pas vraiment, on n'a pas d'impact économique. Et du point de vue des femmes, lorsqu'on évalue leur empowerment, parce que c'était ma grille de lecture, empowerment social, politique et culturel, on se rend compte qu'il y a une forme d'agentivité, en fait. C'est-à-dire les femmes vont, contrairement à ce qu'on pourrait penser que c'est les IMF, les nations microfinances, qui instrumentalisent les femmes, c'est plutôt le contraire. Et ça exprime une forme d'agentivité des femmes, puisqu'elles vont utiliser ces ressources-là pour répondre à des besoins sociaux, notamment des besoins de prestige social, parfois des besoins d'investissement dans l'éducation des enfants. Et puis, au moment de rembourser. Pour le remboursement, on sait que souvent, ce n'est pas les ressources supposées qui sont tirées des activités génératrices de revenus qui parfois n'existent pas, qui vont être mobilisées pour le financement, pour le remboursement des dettes. À la place, c'est toute une panoplie de stratégies qui va être utilisée pour rembourser. Et dans cette panoplie, qu'est-ce qu'on a vu? On peut par exemple faire appel à la famille, à des parents, pour pouvoir avoir ces ressources-là. Donc, ce qui fait que, de ce point de vue-là, déjà, on peut dire qu'il y a un souci, puisque le schéma initial d'impact économique est comme, voilà, ce schéma-là, on voit qu'il est biaisé. Ce n'est pas à partir des ressources issues d'activités génératrices de revenus que ces femmes ont pu rembourser. Donc, ça, c'est dans un certain un premier aspect. Et donc, l'agentivité des femmes, c'est que les femmes vont maintenant instrumentaliser. Elles ne sont pas passives, comme on serait tenté de penser. Elles vont l'utiliser pour satisfaire leurs propres besoins. Ça, c'est une chose. L'autre chose, dans vos travaux, vous avez certainement dû voir, hein, parce que moi, ce que je lis, ça fait 10 ans. Ma thèse, c'était en 2015. Et en 2025, ça fait 10 ans. Donc, ce sont des données qui doivent être actualisées. Dans tous les cas, dans la dynamique, actuellement, ce qu'on voit le plus souvent, c'est plus l'émergence, dans le cadre de politiques de développement, des cash transferts qui sont apportés à ces populations vulnérables. Alors, vous, de votre point de vue, est-ce que vous vous êtes interrogé un peu sur la pertinence de ces deux programmes, de ces deux politiques, en tout cas de ces deux stratégies, qui sont utilisées, on va dire, pour soit sortir un peu des populations, notamment les femmes de la pauvreté ou alors de l'extrême vulnérabilité dans laquelle elles se trouvent. Je ne sais pas si je
pense qu'il a bien saisi.
Very short summary.
Yes, of course.
I think I've understood the majority, and
What was it about?
I
You're
would like to just
talking about
quickly-
the subordination of microfinance institutes by women.
As I understood it, sorry, which country are you from?
Senegal.
Senegal. Wonderful. Thank you. So I would love to read your PhD thesis, which you've just talked about, which, to summarize it very briefly, as I understand, is about how women are not passive recipients of microfinance, but rather are active agents in how they use microfinance and use various ingenious strategies to ensure repayment, which may not necessarily have anything to do with microenterprise. And so your study also partly draws into question whether the microenterprise story is working or is real. Secondly, the question was about conditional cash transfers or cash transfers full stop, and what my view is on them compared to microfinance. I'm not an expert on cash transfers. My colleagues from the Center for Social Protection would be able to speak to that. But we did, for this briefly mentioned systematic review of reviews, look at what the literature on cash transfers and social protection programs says. And even though the evidence there is not as robust as regarding microfinance, it did seem to indicate much more consistently positive effects. So I would argue that actually much more of the type of research and the funding for research that has gone into financial inclusion programming needs to go into cash transfers research. Thank you. I'll stop talking.
Any other questions?
No, I don't want to dominate. I think maybe you can open
3 minutes, right? So let's take those 3 minutes.
Well, maybe there
While
are questions to the others, or the panel wants to have a last word.
anything you guys want to weigh in on?
Want to? No. Ashley, want to? No.
I don't understand why.
No, I was a bit curious about the study you mentioned that the too much microfinance. But you were right, Jill, that when you said the probably we don't have a very uniform story. Bangladesh appeared as this kind of champion running bank. But when I also made the presentation, I also made the point that when it comes to make a real graduation of the poor people, there are still challenges, still big challenges in Bangladesh, whether microfinance is helping them, or it's a kind of keeping poor within that broader poor poverty, or that they're helping to get out of the poverty trap. So that really is a big question. But I'm not sure whether you address that, in your paper.
No, my stuff was at the macro level.
Okay.
It was not on microfinance, it was on finance.
Yeah.
In general. That was what my paper was about. But just one point, sort of as a micro development person. And I agree with you. I mean, our randomista friends, and I can say it on the record, I cannot stand Esther Duplo. And I'm an MIT PhD, right? So I should really like her. I can go on the record on that. Not a problem. She knows it. So some of my best friends are randomistas. I've done RCPs, okay? But as the saying goes, some of my best friends are randomistas, or I like to call her the Taliban of randomization. She's the Mullah Omar. The lot. I think that is a lot better. But anyway, there is no evidence because all these things are badly done. I mean, there's this very famous paper in Econometrica on Alamana in Morocco, and they didn't even talk. I mean, one of my friends is on the board of the microfinance institution, and the JPAL people didn't even talk to these people. They went ahead and did their randomization. It's badly done because there's no understanding of the local context.
Yeah.
So we spend hundreds of thousands of dollars on research projects in the field, and JPAL does a lot of good. Okay, so does IP. They do a lot of good. I've had 73 PhD students over my career. I've sent at least 4 of them to work as slaves for CPA and JPAL. Okay, it's a good career experience. They learn a lot from that, and then they come back, and anyway, it's good on their CV. The one thing I wouldn't poo-poo is the fact that short-term credit. So there's this very famous paper that nobody reads anymore, presumably, but by Mukesh Eswaran and Ashok Kotwal, who are two economists at UBC. They're probably very long of tooth now, and have this wonderful paper back from the 80s, simply called "Credit as Insurance." So what well-functioning microfinance can do, small loans, it's not necessarily something which is going to increase efficiency. I don't think we should see this. Honestly, I don't think we're ever going to see an efficiency effect of microfinance, whether it's digital or not. On the other hand, allowing poor people to borrow in the short run because they get hit by a shock, that is something which is valuable. Then the problem is, if they get hit by multiple shocks and they keep on being allowed to borrow, then you end up in these indebtedness traps, right? But there's nothing wrong. On the contrary, it's very useful people to have access to an insurance mechanism, because another way of putting it, people wouldn't use these services of microfinance if they had access to functioning microinsurance. Right? Because it's credit as insurance. And that, anyway, that's Eshwan and Caldwell, I thought, understood this perfectly. I don't want to have the last word here, please.
No, sorry. No, this is in this context. But in India, in many other developing countries, the microfinance, the loan the households get, even the women, they use that for consumption purpose.
Yeah.
They take it for doing something, but they end up with doing.
Nobody invests.
But that
I don't know, maybe in Bangladesh.
No,
okay?
no, it's not true.
Nobody invests.
What he's saying is mostly.
You agree, right?
Yeah.
So that actually put them in a loan trap because the kids, they don't pay, then they ask for loan and all that. So I don't know how. That's the reason I was trying to link that with efficiency.
Thank you for the point you made. I'm not at all a specialist of microfinance and loans. But what comes to my mind is that perhaps the issue here is not the instrument itself, but the approach to it and the greed behind it. If you use an instrument with a motivation to maximize your own profit, then of course the whole thing is so biased. Yeah. Yesterday, we were talking about the microinsurance scheme that we have. You had lots of questions, which now I understand. And I think you had a priori negative opinion about it. In fact, the problem of insurance is a wonderful scheme. The problem of insurance is greed. If you run an insurance with a motivation to protect people and to make it viable and not to make your own profit, then you have a working system. If you run microfinance without the motivation to make your own profit, maximize your own profit, then if you don't run with that motivation, then you have possibly a better system. So I think that the point you were mentioning, made me think about this. Really is really the issue.
Thank you.
We're out. You have the last word.
No, thank you.
You should have the last word.
No, thank you, Jail, and thank
You have to defend Muhammad Yunus.
I at this moment, probably I'm not serious trouble. Probably know that he's actually heading the interim government. So that's become very political now. But again, I think we must thank GDN and all the panelists. But I think we had an excellent session, excellent discussion, very vibrant discussion. So that's it. Thanks to everyone.
I think we have some copy, then we have a keynote, then we have the distribution of the Japanese awards. So I get to go. And then we have a cocktail as well at the City Hall. That's that. Honestly, don't miss that. The building is.
I understand.
It's the power of these things.
We'll have a 42 panelists. Great. Yeah, sorry.
Anyway, just wanted to say that.
Yeah.
I did not want to come across as.
Can I take it from this together? Perhaps coming from the point of step.
In fact,
Yeah.